So we are going to continue with the question of Fernando again. Fernando was asking, do you have a predetermined percentage of how much of each asset your portfolio should be composed of? For example, 80% index funds or ETFs and 20% stocks. And inside this example of 80% index funds, how much are emerging markets and how much is MSCI World, etc. Would you consider investing in government bonds? Thank you in advance. Fernando, again, thank you so much for your questions. Now, I will respond to these questions one by one, and all of these are my opinion. I've also started investing in January, so I'm also learning a lot of things. But so far, I'm learning by making mistakes, by just doing things, and by sometimes having success in those. So all of these are my opinion. Do your own research before it. So about the question of predetermined percentage. So I don't have it. My idea was, in the starting, I calculated how much compound interest I will get if I put aside 500 euros every single month into MSCI World. And let's say I take the money out, now I'm 25 right now. When I take out the money at 65, how much will it be? So it was a decent amount and I was happy with that. So I'm just saving 500 euros a month to the side for MSCI World, core MSCI World, which is an accumulating index. So you have either an index which gives you out dividends. I don't want that because then the growth of that index reduces, and that's why I chose for this accumulating index fund. So here it is one of the biggest funds available for MSCI World. That means the chances for it to sometimes dissolve and get merged with some other kind of index funds is also very less, because in general it is more profitable because it has a bigger fund size, and because all of these funds charge the total expense ratio as a percentage. So they're charging 0.2%. The bigger the fund is, the bigger the 0.2% of that is going to be. I'm not worried about it. So first, that was my idea, starting out investing in index funds. It is the easiest, it is the smartest, because you are diversified and you have some kind of safeguard against burning by making some kind of wrong investments. Right now, because the business is doing well, my risk tolerance is a bit higher. And that's why I'm also investing in individual stocks. But let's say for the first 2-3 months when the business, because of the corona thing, business was not running that well. So I was only investing in the core MSCI World. And I also started investing in emerging markets. But when I saw how quickly emerging markets are affected, that they're suffering over the longer run, I just pulled out my money from that. So I sold the MSCI emerging markets at a loss, but I'm happy with that. I would not invest money in that, especially if you have, let's say, lesser money to put inside. Generally, what the German investors prefer is 70-30, so 70% in the core MSCI World, which is for the developed markets, and you have 30% for the MSCI emerging markets. I don't follow that. I just put money inside the core MSCI World, because my idea is these companies in US and stuff who have so much money, who have so much power, they will not stop acquiring other kind of smaller companies in emerging markets. So this is what I'm banking on, and I also believe that they're not going anywhere in the future. So this is also the reason why you see American investors only investing in S&P 500. So again, depends on the confidence in the American market. So far it's really high. I'm just going ahead with that. Emerging markets so far has no priority in my portfolio. Now, of course, it could be different for everybody. I don't have a set percentage of how much I want to invest in index funds. I just have a fixed amount of how much I want to invest, and all of the money that I'm getting on the side, I'm investing in monthly dividend stocks so that I have some kind of monthly income from the assets that I own. Because of course it feels nice that something is going up in value, let's say every next month or something, but when those stocks pay you monthly, that just feels even nicer, because you have the control again on where do you want to invest the money afterwards. Now, because Trade Republic, let me show you, it is also offering different kind of now savings plan, and when you're investing in stocks, you can just put up automated savings plan from just 10 euros. And my monthly dividend income so far, let me show you the DivCalc. This is an app on App Store, and many of you told me there is no similar app on Google Play Store for it. Maybe you find something. If you find something, let me know. I will talk about it in a video. So here, if you see on DivCalc, Main Street Capital is giving me the most money so far, which is 23 euros 36 cents. This is monthly income. Then AGNC 22 euros 20 cents, again monthly income. Prospect Capital 21 euros 5 cents, again monthly income. Gladstone is 19 euros 79 cents, again monthly. Realty Income is €7.15 again monthly, and Stag Industrial €2.66. It is also monthly. Now here from all of these, like I'm really excited about the Main Street Capital Corporation, because they have been increasing their dividend for a very long time, and once in a while they also like pay out a larger sum of dividend. That like feels nice. So going forward, like of course I'll be investing more in the monthly dividend incomes, but the risk with that is your portfolio doesn't like generally just like grow over time. It could also like just keep on going sideways. So for the growth part, I have the index fund, so core MSCI World. I'll be like putting money inside regularly there. And then for the dividends, I have these other companies which are paying me monthly. My goal for that, like at least for this year, is like reaching €3,000 of yearly dividend income. I do not think that will be possible, because that would mean that I will have to put like, let's say €40,000 or something more inside the stocks. I don't know if it will happen or not. If it happens, great. If it doesn't, well, next year. And I think the final goal would be to like reach somewhere around €20,000-30,000 of yearly dividend income, so that at least, let's say, the house's property tax and things like that are paid off, and like the electricity and everything. So that is like, again, what is my motivation for it. So I think like that pretty much sums up the question. I do not have any kind of fixed percentage that I want to put in the index funds. I have a fixed amount that I'm putting inside. So rest right now I'm focusing on the dividend stocks. Again, it can change sometime in the future, and when it changes, and then we can sit down and have a discussion about this topic again. So far I'm happy. You just have to be satisfied with the strategy you are choosing. If you have lesser money, put it inside the index funds, and from lesser money, I would say, let's say €500 a month or something. So to summarize everything, I do not have any kind of fixed percentage for the index funds. I have a fixed amount, and as long as you can save aside €500 a month, I would rather suggest you to put inside the core MSCI World. You can see if you want to invest inside emerging markets. I'm not doing it right now, and of course, like, you know, these kind of things can change anytime. I'm not doing it. You can of course choose your own strategy, read on things, and decide otherwise. I'm also investing in the dividend stocks which are paying me monthly. So this is just a nice motivation for me to like keep pushing towards the goal of like, let's say 10,000, 20,000, 30,000 euros a year of dividend income. Right now it is just at 1,600 euros. Now, so again, thank you so much for watching the video. If you have any kind of questions, let me know in the comments below. If you haven't yet opened a depot, you can open it up easily with Scalable Capital with the link given in the description. If you haven't yet opened up a depot which you need to start investing in the stock market, you can either open it up with Trade Republic. I have my depot with them. Or you can open up your depot with Scalable Capital. This is easy for people who don't have the German nationality or the German ID, and it supports post-ident, so that you can open up your depot rather easily. Thank you so much for watching again, and I'll see you in the next one. Bye.